A world powered by the blockchain is being formed right in front of our eyes. Experts are calling it the Internet 3.0, the next digital revolution. It's leaving many investors and even institutions looking for a path to take an early position in this massive opportunity. Bitcoin, Ethereum, Ripple, Dash, it's all speculation at this point. But what is certain is that the most profitable businesses for cryptocurrency and the blockchain is in the actual creation of these coins. This is why some of the top early adopters of Bitcoin, blockchain miners, fund managers, and even billionaires have come together to create a new vehicle to invest in the blockchain core itself. Get immediate access to this new company by going to crushthestreet.com/Bitcoin. Hello everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri. And this is insane, guys. $13,000 Bitcoin is here. It's happening. And we're going to have a great call today with one of the smartest people in the investment community, Frank Holmes of US Global Investors. And he's also the chairman of newly formed cryptocurrency mining company, HIVE Blockchain Technologies. And the stock has absolutely caught fire, and it's taking off with cryptocurrencies. Frank, thanks for joining me today.
Well, Kenneth, it's great to be with you.
Well, I remember sitting down with you earlier this year, and we discussed how big of a deal cryptocurrencies are becoming, and it's just been a matter of months. We are seeing it accelerate to the next level, i.e. $13,000 Bitcoin. Can you speak to this?
Sure. You know, I wrote a piece on this, Kenneth, a month ago, and what's the logic behind it is called Metcalfe's law. And Metcalfe noticed that when you get more users using a network, such it could be cell phones or it could be cable, the value of each user goes up geometrically. So what does that mean? Well, if you look at 21 million coins of Bitcoin will come out over the time. There's been lost to probably 15 million coins, 5 million of those coins. It's been estimated. So, and the rest of the coins have been mined. So the float today is 10 million. That's what it is, 10 million coins. And if you have more and more people buying $10,000 worth of coins, just one coin, then the value is going to rise geometrically. This has been well documented, Metcalfe's law. Anyone can go Google it, and it's very insightful to explain it. So what's happened there is that you're having a Coinbase, which just blew me away, the data point that came out last week, that Coinbase in 3 years has 13 million accounts. And Schwab has taken 30 years to get 10 million accounts. So that means that they're even bigger in the number of accounts. Now, they're not close to bigger in dollar amount, because Schwab has over $3 trillion in assets under its umbrella. But what's really significant is this incredible geometric growth in users. And some days, 100,000 new people signing up at Coinbase and other service providers like Coinbase exchanges to open an account and buy some Bitcoin, buy some Ethereum. And so I think that this is what's really important for investors to recognize, that it takes 5 minutes, kind of 5 minutes to open an account at Coinbase. It takes 2 days to a week to open up a brokerage account. And so the millennials are bigger than baby boomers. That's an important demographic fact. And there's just a different set of values and beliefs. They have Tinder. Most baby boomers don't have Tinder. It's a bit of a joke, but the fact that you have a dating service on an app and you can know right away, a guy hooks up a girl hooks up a guy, this immediacy of being able to execute shows up also in investing. And to speculate, the regulations and rules have become so draconian that we've witnessed a 75% drop in IPOs. We've witnessed a massive drop in the number of brokers, and now it's coming out, brokerage firms are shrinking. Asset management companies are shrinking. And it's just this incredible amount of regulations, but with all this money, people are going to go find a way. And that millennial world is just not going to accept waiting that long. And so they're speculating. And there's other rules of fiduciary rule interpretation. I know this is very big in Canada. It's basically put a kibosh on speculative investing. But the public wants to speculate, and they want to speculate in something new. And the idea of being able to go into new technology companies in the 90s, it's such a prohibitive, it's all owned by venture capitalists and accredited investors. The retail person doesn't get a chance, and even small institutions don't. So I believe there's a movement, and you really can't stop the flow of funds, and they're going into Coinbase. And there's also a huge, I mean, just blew me away numbers, trading with Marco Strang, the CEO, 28 years old, Kenneth, the CEO of Genesis Mining. Finished math, university math at the age of 16. He runs 800 employees off his smartphone. They have over 1.5 million customers. They're growing at 50,000 a day. Well, what are they doing? They're like a bunch of small entrepreneurs all over the planet mining coins. And you can mine using their technology, use their cloud service. They have services in cool climates like in Sweden, in Iceland, where they're allowing you to mine these currencies, and you can supplement your income. So there's something that's happening, both buyers and also retail mining these coins. And I think that this is the big sea change. And HIVE is positioned there as the first public company because Genesis Mining is the biggest mining company in the world privately, and they're our partners. So all of a sudden now we have a public vehicle. They own 30% of HIVE, and HIVE Blockchain is in Iceland, and we're mining coins. And we're doing Ethereum right now. We're doing Ethereum Classic, which has had a huge move for us. And why? Why Iceland? Cheap energy and cool weather. Very important ingredients. You just can't do it in Nevada, and you're not going to do it in Texas to be really commercially profitable, because you need to have those two factors.
Wow. You know, I heard Doug Casey discussing HIVE, the company you're chairman of, and you brought that up, and he put a $10 price target on the stock. And in this environment, nothing would surprise me. Can you speak to what the company has been able to accomplish in this environment?
Well, from his lips to God's ears, it goes to $10, but I'm going to be much more micro to share with you. We're mining coins, and our revenue is when we use the business plan and the performance on the back of the envelope, the numbers say that in November we should be hitting $1 million a month. Going into December, it's going to expand again. Going into January, and by the time we get to April, our goal, based on our performance business plan, is to be doing $50 million a year in revenue. So we did our $1 million. We're happy about it, and so we're on track, and it's growing. What does that mean? Well, we have 75% gross margins. So on every $1 million, we're having gross of $750,000, and our G&A is like $450,000. So in our first month, we do well. You know, and it grows from there. It just continues to grow. That when we get up to 50 million in revenue in the second quarter of 2018, which will be a run rate of 50 million a year, then we should have free cash flow based on the performance of $25 million. So that justifies that huge run. And the reason for that is that when you look at Amazon, and who's first mover advantage, and that's what we enjoy. HIVE is first mover, first public company that you can buy, a company mining these coins. And really important, Kenneth, is that they're virgin coins. There's no anti-money laundering law issues. That's why there's been such a delay in allowing an ETF to come out, because they don't know if those Bitcoins are coming from the dark side, where someone hacked Sony and got paid off coins, like for simplicity. Not that took place, but a lot of times you read where hackers want to get paid in Bitcoin, and the last thing you want them to show up in an ETF. So that's why the regulators say if you can't figure out where the money's come from, we don't want it. Well, we don't worry about that. We produce virgin coins, and that is really special because institutions now can buy our stock, and that's what we saw. The Fidelities of the world coming in to buy the stock in a private placement, and we quickly raised almost $70 million out of the box in the first month of trading, and that gives us the capital to expand our production up from $1 million a month to $50 million a year.
Frank, I think it's pretty clear that Bitcoin is benefiting from first mover advantage, and many smart people have said Bitcoin isn't even the most ideal cryptocurrency out there due to its limitation. But no one can deny how powerfully first mover advantage has been for Bitcoin, and you alluded to it, you talked about it, but I'd like you to expand a little more on the fact that Hive has that first mover advantage and what the implications of that mean going forward.
Well, take a look at Amazon. Amazon trades at 200 times earnings. Take a look at NVIDIA, who make the graphic cards which are necessary to process. You need these very expensive graphic cards, and Genesis Mining is one of the biggest buyers in the world of their cards to process Ethereum. And so when you say, well, what do they trade at? Well, it's a $120 billion market cap. NVIDIA trades at 60 times earnings because they have these best cards that are being used. And they don't have first mover. They're first mover in the cards being used for this space. But Amazon has first mover, and Tesla. Tesla's another classic example that Tesla trades at 6 times revenue per share, and General Motors trades at 0.6. So that means that Tesla is getting $10 times more for every dollar of revenue, not earnings, of revenue per share. The market pays for first mover advantage. So I think for ourselves, if I was a value investor, I've always said this, that as a value investor, it's easy. I would say that HIVE is overvalued. But when I come in and say it's the only player and it's first mover advantage in a high growth sector, no, it's not overvalued. And you have to go and look at metrics of free cash flow multiples and revenue multiples. And so us being able to have in a year from now, say $25 million of free cash flow, that run rate would suggest 40 times that number. And first mover advantage, that's not expensive. So now, can we quickly go and acquire other assets and develop other resources throughout the Nordic countries? Because Nordic countries are safe countries. Nordic countries are cool weather and inexpensive electricity. So we can expand that as we're looking at. Then we can take this to 100 million in revenue and have $50 million of free cash flow. Well, what's that worth? That's worth $2 billion. That's where you get $10 a share. I think that's where Doug plays with that space. But we have lots of things to execute before at $10. But do we have the opportunity to do that? Yes, we do. And we just got to move fast.
You brought up Amazon, and Amazon started off as a bookstore, online bookstore, and then they really expanded into so many different areas. And, they came out of the dot-com bubble, really the rose to the top of it. And so my question is for, HIVE, do you anticipate HIVE expanding beyond cryptocurrency mining and into other blockchain applications?
We don't know that right now. We just want to be very singularly focused on being the premier mining company in the world. And one of the nice parts about partnering with Genesis Mining is that they're the most advanced in their algorithms and technology for mining. They're much more efficient, 15 to 20% more efficient than other miners. And there's some other companies talking about going public. And when we drill through and look at their numbers, they're just not close to the efficiency that we have enjoy with the relationship with Genesis Mining. And so it's just stay focused, Kenneth. That's it. Just stay very, very focused. Build the biggest, most powerful data centers as these other coins evolve. This is the early 90s in this space. And for your listeners, I've been telling people that people were afraid when they first heard about the internet until emails came along with AOL. And all of a sudden, the idea of using the internet was spectacular. And a lot of those original names, Ask Jeeves, they're all gone. Yahoo's looks like it's going to go soon, but Google came later, Facebook came much later. WhatsApp, all these things come later, and so we're very early in this whole build out. Just like when the email server came out, the blockchain, Bitcoin is what email was to the internet. Blockchain applications are going to grow, but they're going to need these service centers to process Ethereum coins. And by the way, most of these new ICOs that have come out, there's a couple thousand with about $3 billion this year. Most of them are on the Ethereum protocol. So we have lots of opportunity.
Frank, we are in an environment where people are selling their gold to buy Bitcoin. The psychology of markets that cryptocurrencies are putting, the world through could probably be studied for centuries. And my question is, would you suspect gold to be doing better if there was no Bitcoin doing what it's doing?
It's a question that's been asked often, but Kenneth, no. I think that's what's really disruptive in the capital markets and these ICOs and Bitcoin. It's to the small cap investing sector. It doesn't matter if it's mining for gold or it's oil and gas or technology or healthcare. The process for opening an account and speculating is just so difficult today that the regulators have chased everyone away. And they're going to go to their form of Vegas, but rather than just speculating for a zero outcome, they want to be associated with the next Facebook. And so it's being replicated in the ICO market. So I think that's what's really important to recognize. Now, the early buyers of gold, when I talked to Genesis Mining when they were starting their incredible company, those early buyers were gold bugs that were diversifying. They never sold their gold to go and buy Bitcoin. They wanted to diversify it. And so I don't think that's taken place to the degree that you hear. I think that it's probably a much more significant impact on junior mining. And I think that the world of gold has been dented because, like yesterday, the big notional number of futures market hitting the market. I think that as the governments are printing all this funny money globally, fiat money, I think that they can't manipulate the price of Bitcoin. And maybe with the futures market coming out, they'll try to be able to come and dampen it there. But I think that something happens with the price of gold. And we all know psychologically is if gold was to explode, it would truly expose the fiat money world. And the fact that central banks are a cartel now, the G20, and they're more consumed with global tax and regulation than they are in growth. And so until there's a sea change in their psychology and what they're focused on, I think that we're going to see this sort of speculation in the ICO world continue. I think we do need some regulations for cowboys, because there's some crazy deals out there. But that's free markets, and we don't know. When you think about going back to the beginning of the internet, which I mentioned to you before, was that Bitcoin is to blockchain technology as what the email was to open up the internet. And those early companies are all gone, and now we have the Google survived, you have the prospered, you have the Facebooks, you have other significant companies. So we don't know in the blockchain who's going to thrive. Some believe it's going to be Ethereum this year, in 2018 is going to surpass the sort of percentage growth in Bitcoin. I don't really know that yet, but I do know that there is a change in the concept of investing. And I think what's going to happen in the cryptocurrency world, they're going to become another asset class, of a non-correlated asset class. And institutions are going to say, oh, I need to have some of these non-correlated asset classes, like they did with junk bonds, or like they did with a lot of them originally bought gold as non-correlated asset class. And I think they're going to start seeing, and when that happens, we're going to see another level of cryptocurrencies trading higher.
Frank, Bitcoin or gold as money or as currency is deflationary, and economists have argued that deflationary currencies are bad for the economy. And I just wanted to run that by you and see if you agree with that premise. It's something that, I think about a lot, and, just the psychology of the economy, what's good, what's bad. And I'm just curious, what are your thoughts on that?
No, I disagree, because what they're saying to you is that there's a bad depression, and so that's what's impacting the country's currency. There's a different dynamic, and it's all new for them. So they don't write about the fact that if you create too many regulations, you create a dark pool. Well, you always get a dark. Think of prohibition. They came in to stop everyone from drinking. Where do they create? Al Capone.
Right.
So they're worried about this blockchain world, et cetera, or cryptocurrency world. Well, as part of it's the regulatory world and mindset. They create these things, and they have to they had to bring back and allow drinking to come back. And alcohol came back in phase a decade later. So I think that what we're witnessing now in the cryptocurrency, it will still have lots of friction, lots of turf war. Is it an asset, as the IRS says? Is it a security, as the SEC says? And is it a currency or a commodity, as the CME says? That's all to be resolved because we're early, Kenneth. We're really early in this space. And what I love about HIVE is HIVE doesn't really get caught up with this currency versus that currency to the degree you think. We're more consumed with our hashing power, our cheap electricity that we can mine whatever's most attractive. And that we're the part of that infrastructure build out. And what survives the most in technological build are infrastructure build out companies.
Right. And I agree with you on that, in the sense that deflationary currencies aren't necessarily a bad thing. And, governments and the banks, they want you to go out and spend your money. And if you think about it, if people were incentivized to save, how would that change their life? They'd buy a smaller home, they'd drive a more affordable car, they'd carefully spend their money because they want that money more than to consume. And so I guess my last question for you as we wrap up this call is, considering governments and banks like inflation and the ability to print, how competitive do you believe cryptocurrencies will be to the current system?
I think it was because of many reasons. I think it's going to start holding governments accountable for bad practices, for printing of money. I mean, what we're seeing in Switzerland, they print money, they go and issue big in Swiss francs, and only 300 million is bought by pension funds, and they go and just buy it themselves. Now they got 700 million Swiss francs, and they go buy Apple stock. They own 15% of their own stock market. The same thing is in Korea, South Korea. The same thing is in Japan. The biggest investors are in their own stocks are the central market, and now they're a central bank, and now they're going outside of that. That's just outrageous. That's not their job. They're printing money. So I think that the growth of Bitcoin is more of where the deflation is not Bitcoin. It's the other countries that are being forced down because they're poor practices. That's what's going to expose.
Frank Holmes, everyone, of U.S. Global Investors, also the chairman of HIVE Blockchain Technologies. Frank, if people want to learn more about you, more about HIVE, more about U.S. Global Investors, please let them know where they can go and what they'll find.
Well, go to usfunds.com and sign up for Frank Talk. And I have, with Investor Alert, 40,000 readers in 180 countries, and I publish every week, and I give a SWOT analysis on the Investor Alert. It's always 3 sentences, 3 strengths and 3 weaknesses that impacted an asset class last week. And it's written with myself and my marketing department with the portfolio team. And what next week could be an opportunity or a threat. The SWOT analysis is like a game film analysis of capital markets. And I write about blockchain, and I write about gold and China, and I have an Eastern European fund. So it's a unique collection.
Excellent. Well, Frank, thanks for coming on Crush the Street with me today. I really appreciate your time.
So thank you so much, and happy investing. 2017 has been a great year.